Hi, my name's Josh Mahoney, Chief Market Analyst at Scope Markets. As we draw towards the back end of a week that's been dominated by central banks, we of course start to look ahead towards the final 2 weeks of the month and wonder whether this Santa rally is going to continue apace, has yet to begin, or is going to fail to happen. Certainly, equity markets have been doing well. We've seen European indices, certainly the likes of the CAC and the DAX, hitting record highs. We're seeing some of the US markets moving in that similar direction. And so I wanted to look at some of the data to inform us over previous occasions and see how this might play out this time around. So let's look first and foremost at price action over the course of December. Now, what we have seen is it's been very changeable over the last 15 years. You've seen some particularly bad years. Last year, of course, 2018 as well, we've seen big slumps. We have seen some strong Decembers, 2019, 2000, 2021. But we've also seen, a handful of downside moves. So I wouldn't necessarily say that this is the kind of thing that encourages you to say every December is a buy on the 1st and sell on the 31st kind of situation. But if we break it down according to the first 2 weeks of December and the last 2 weeks of December, we can see some differences. First and foremost, the losses are generally greater within those first 2 weeks of December. They ease off somewhat towards the back end, and the gains appear to be more frequent on the final 2 weeks of the month. Certainly, if we look over this 15-year period, we will be able to see that there are actually only 4 occasions out of 15 where we saw downside moves for the S&P 500 over the final 2 weeks. And in actual fact, if you strip out that 2008 move, which was very minimal, we only saw 3 significant downside moves for the S&P 500 over those 15-year period that we're looking at here. So certainly the latter 2 weeks generally look to be more favorable for traders compared to the first 2 weeks. And if we plot that, so we're putting the December return, the first 2 weeks return, which is in red, and then the green line is the last 2 weeks, we can see that by just trading those final 2 weeks of the year long S&P, you can see that generally it has played out much more advantageously for markets. Now, this could come down to a number of factors. Part of it could just be down to coincidence. Part of it could be down to the idea that a lot of traders might get away from their desks. They might clock off for that period, and therefore the institutional money dials down and it becomes more retail focused. They might be in a bit more of an optimistic mood. Either way, we just wanted to look out for how things stand at the moment and really point out how things appear to be shaped up towards the back of the year this time around. Now, of course, what we do know is we've been on a very substantial run higher for the S&P 500. Let's look at the weekly time frame. We can see we're trying to edge in on that record high, 48.17. The 4-hour chart, I would say, is probably the one to be looking at here, because what we've got is a very clear uptrend. Generally, you will have periods where it sort of runs away from itself. Often there's a good chance of a decent pullback, but of late, we haven't necessarily seen that. So you can see over the course of November, we saw really strong upside price action. Each time we saw a retracement or a consolidation, it was more a sideways consolidation before we move higher compared to something that resembles a sort of significant swing like the moves that we'd seen prior to the back end of this year. Of course, we've seen a very strong run up this time around, with the Federal Reserve alluding to the idea that we could potentially see a raft of rate cuts next year. And so we've seen another surge in towards the back end of the week. Well, we're now starting to consolidate somewhat off a bit of a mixed message from the likes of the ECB and the Bank of England. Surprisingly, the ECB, with the fact that they've got the economy in trouble and inflation at 2.4%, they seem sort of a little bit more hesitant compared to the Federal Reserve when it comes to a sort of swift pivot back down to an easing position for next year. Nonetheless, I think there's a very good chance we do see them pivot swiftly. Markets looking for a March pivot, and that's because there's a good chance that in March, by the 1st of March, where we see that February reading come out on the CPI front, that's when I think we're going to see inflation break below that 2% mark. So I don't think there's going to be much reason for them to not start cutting rates at that point. Nonetheless, you can see that we're starting to weaken a little bit here. We've got this ascending trend line in play. So there's a possibility that we do see a bit of a near-term pullback But by and large, if you look at the price action coming into it, we've seen sort of very minimal pullbacks. It's been more consolidation than retracements. And this time around, if we see a pullback, I think that we're likely to be figuring within this latest rally. So we could see a little bit of near-term downside. But even if that happened, I think it'll be relatively fleeting. I think we will have a strong year end, much as we've seen historically. And so for me, I think it's very likely we do see the Santa rally continue apace as we head in towards the back end of the year. Of course, this is all conjecture, and we have seen such a strong rally coming up into this move already. So it's worthwhile noting that many will see this as a massively overbought market at the moment. We're only at the beginning of this easing phase. Interest rates still remain very elevated, but the forward-looking nature of markets really is there for all to see at the moment, with us encroaching on record highs, despite the fact that, of course, we're still some way away from where we want to be in terms of the monetary policy position, in terms of the global economic picture. Nonetheless, the data suggests potential strength towards the back end of the year, and I think there's a good chance of it.